mind, looking for a dime. James Locke in the house, gonna help you shine.
All right, welcome to the Pool Locke YouTube channel. I'm James Locke. Today we're going to answer 2 more questions from our viewers. First question is from Trevor. Trevor wants to know, what do you think about TIPS? T-I-P-S. All right, TIPS are Treasury Inflation-Protected Securities. TIPS. And, you know, they originally got some significant attention because of the previous, when inflation rates were high and all that sort of stuff, and the returns popped up to 7, 8, 9%, even more, and a testament to their inflation kind of adjusting feature. However, it's important to note that some limitations, individual investors face some restrictions on annual purchases, and institutional investors often find themselves unable to access these kinds of investments. So here's my concern with TIPS. TIPS are issued by the government, which has a vested interest in maintaining low inflation rates. This sets up a scenario akin to the wolf guarding the hen house. Essentially, the government aims to borrow money from investors like you at the lowest possible interest rates, even though retirees often experience inflation rates higher than those officially reported. So consider this analogy. Lending money to someone who dictates the interest they pay to you annually, regardless of your financial needs or prevailing market conditions. It's a challenging proposition. So while TIPS do offer appealing features, such as their those high yields they had in the past, I always remain cautious about it from a philosophical point of view. They may not always align with your objectives of securing stable retirement income while minimizing financial risk. Therefore, it's crucial to carefully evaluate whether TIPS fit into your broader financial strategy. Understanding their benefits and drawbacks will help you make informed decisions that align with your kind of long-term financial goals. Important question about TIPS. They're always a topic of conversation, those investments. If you have a question you'd like to send in, email it to us. You can email poollocke@poollocke.com. Now let's get to our second question. It's from Patrick. He says, I saw the other day I could get a 4% on short-term CD. So should I go ahead and invest in that? It's a great question, and one that many individuals consider when they come across enticing interest rates on short-term CDs. Simplicity often holds a lure, especially in financial decision-making. Banks are currently offering 4% on short-term CDs because they can earn higher returns on loans, such as mortgages, car loans, things like that, in the higher interest rate environment. So it's a strategy that benefits them in the short term, and it may initially seem advantageous for you as well. However, let's dive deeper into this topic. The truth is, these higher rates on CDs are not sustainable in the long run. Right? Longer-term CDs are not offering competitive rates right now because banks anticipate that the Federal Reserve will probably keep rates, aligned, right? Therefore, while short-term CDs can provide a decent return now, upon renewal, you're likely to face significantly lower rates, right? This presents a challenge if your goal is to generate sustainable retirement income for a long period of time, not just a year or so. Retirement income planning necessitates a strategic long-term approach. Opting for CDs addresses your income needs only in the short term. While you may enjoy a high rate for 1 year or 2, it will diminish substantially thereafter. And if your aim is to secure reliable income throughout your retirement years, committing to lower rates in the future won't facilitate achieving that objective. So instead, consider adopting a strategy that prioritizes income generation over capital appreciation. Explore bonds and bond-like instruments that offer more stable returns over extended periods even if they currently yield lower rates than short-term CDs. Diversifying your investment portfolio with income-focused assets can shield you from interest rate fluctuations and provide a consistent income stream throughout retirement. So while short-term CDs serve well for immediate financial goals and short-term purchases, they may not be the optimal choice for securing that long-term investment retirement income. It's essential to kind of strike a balance between risk and reward across the entirety of your retirement horizon. So if you find advice like this valuable, don't forget to always like and subscribe to our channel. Hey, it was a good question, important question about CDs and understanding them today and in the future. If you have questions about anything, CDs or anything else, email us. You can email us at poollocke@poollocke.com. If you like what you heard, like I said, go ahead and like and subscribe to our channel. I'm James Locke, your retirement income source, and I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear.